Good morning, everybody. It is 7:19 in the morning on Thursday, the 19th of April, 2018. And we are taking a peek at our markets, watching and observing what happened yesterday, going into today. Shockingly, not a whole lot of moves. Let's take a. We're going to return to our looking at markets and viewing them on the Ichimoku system, and using that to kind of form a bias in our trades. Let's look at the activity from yesterday. So the first trade we had yesterday was New Zealand dollar, the NU, New Zealand dollar, US dollar. We wanted to go short at a return to 73.11. And we did get that, and we kind of just fell through. And we haven't really had much of a return to lower prices here. We've kind of been forming almost kind of a base. So not much of a mover there. Only 5 pips in the profit ever since yesterday morning. So really kind of a flat mover. And then on the pound dollar trade, which we had 150 pips on that from Monday to Tuesday, Tuesday into Wednesday. And right now we're looking at, we wanted to go short on a pullback to 142.4 and 142.6. We're right in the area I think that is safe for adding to the shorts at this position right here. In fact, I think this is an okay area. We could see it push a little higher, maybe towards this 42 zone, but I think we're well within that zone. Just looking at how this candlestick on the hourly is forming, this may turn into a tweezer top, but we'll keep an eye on it. And we had a euro trade. Euro's just, really, if we look at the euro, we're going to take a peek at this in the daily. Looking at the euro, we want to go short at 73.81, which we did get a nice move in, then just kind of fell down, back up. This has just been a zigzagging a trade for a while. Really no clear direction. It's actually technically consolidating on the daily, but we'll get back to that. And then the US dollar, Canadian dollar, yesterday wanted to go long at 107.23. Oh, sorry, that's not right. 125.65, which we did get into. We caught a nice rise up. Question maybe asked, there was important economic news data that came out, and it could have been good or bad. When you were looking at a chart on a daily and you see that when we were looking at it from that different structure, there was some natural harmonic support here. When things are in structurally oversold conditions like this, and you're coming into a major news release, prices will almost always reverse in the opposite direction. It's very rare for prices to trade down this low. And we're in almost into overbought territory on the RSI, and we're in very obvious buying territory on the composite index. When prices come down to these levels, it's very, very rare for prices to continue to accelerate lower, even if there's bad news. And so the behavior is for price to move up more. And that is exactly what we watched and observed. And we should actually expect that to continue on through the day here. And then the dollar yen, we wanted to go long at 107.23. And that worked out fine. Okay, now taking a peek at these markets. Drinking a little coffee. Let's take a look at that euro real quick. Actually, we do have some news coming out at 7:30. Just initial jobless claims in the Philly Fed. you know, nothing real big right now. But if we look at the, if we add some trend lines here, we can see that we are consolidating in here. And so we need to be careful of breakouts to the breakouts above and below. And if you see, we're pretty isolated in neutral territory on both the RSI and the composite index. And notice how volume is just dropping. Volume is decreasing quite a bit, but if we look, we've had some uptick over the last couple days. You know, there is, if we're looking over here at the consumer confidence, then we're looking at that being probably a major catalyst. Now the trick is to determine, we're going to do some long analysis on this euro dollar, because we want to catch the ride in whatever direction it decides to go. Okay. On the pound dollar, looking at this on the Ichimoku system, why are we going short here? We're going short because we are still below the cloud, and because we found some resistance. It's an okay distance from the cloud where we found some initial resistance, and that has continued into this hourly. If you want to wait to re-enter a short, if you want to be more conservative, we could wait till the price were to close back down to 142. Okay. But otherwise, you know, if we want to look at the swings here, from that swing high to this swing low, you know, we've retraced 38% of that move, and then the 50% move is up at 142.7. Or we could look at it like from this swing, and we are at the 50%. Or if we want to look at it this way, we are at the 886 retracement level. And that's a pretty, 886 retracement is a pretty powerful rejection zone. And we'll just see how this plays out here. But we should see further downside momentum. Okay, and let's see, looking at the dollar yen, we are actually in a good buying signal. Okay, we have actually a really pretty great buying signal. What is the buy signal? Well, the cloud ahead is green. Remember our rules for entry in Ichimoku, that the Ichimoku long entry rules. The first one is price must be above the cloud. 2 is that we want the cloud in front to be green. We want the conversion line greater than the, don't have to type that in, greater than the baseline, and the lagging span above the cloud. Okay? So those are our long trade rules. And are those met? Yeah. Actually, they are met pretty nicely. We are above the cloud with price. The cloud ahead is green. The conversion line is greater than the baseline. And the lagging span is above. Also, if we look at the composite index, we have supported buying conditions. So that is all good. If we look at the longer time frames to kind of give us an idea of what's going on, we are above the 4-hour cloud. So it looks like we found some support around that zone as we've gone up here. And we are above the 8-hour cloud. Okay, so that's all good news. That is what we're looking for. And so we are in a safe buy entry right here. 107.37. Okay. Now let's take a peek at the US dollar, Canadian dollar. Nice rise up yesterday. If we want to look at this from the swing, where are we sitting at? So we're sitting at the 50% retracement from this swing. And we found support at the 618. If we want to look further down, we're looking at the 50% zone. Yeah, so we're in a good buy zone here. And also, you know, what are our conditions for going long again on the cloud? Well, we have those met on the hourly. The lagging span is above the cloud. Ideally, we don't want the lagging span to go inside the candlesticks at all. Like if we're in an uptrend, we don't want the lagging span to go below price. But the cloud in front is green. Price is above the cloud, conversion line is greater than the baseline, the lagging span is outside the cloud, so we do have supportive buying conditions, and it's looking like we're kind of finding some support here on the baseline. And again, if we remember what we talked about with the baseline, that the baseline is kind of like price is attached to the baseline by a rubber band, and when it gets too extended from the baseline, it likes to come back down to it and then move on again. Okay, it's like a bouncy ball. It gets thrown up from here, comes back down, finds support, bounces off. But each consecutive bounce, it gets less and less, and that's what we want to see have happen here. Okay. Now taking a peek over at the Aussie dollar. We have a funky trade going on in the Aussie dollar, and it's very consolidative, but this move is fairly weak. We're looking a little you know, not very supportive on this move anymore. You know, we're going to want to wait to see what happens if we do dip below the cloud more. That's going to kind of determine where we're going and how far we could go. So we want to keep our eyes on that. New Zealand dollar. Well, it is a choppy trade. Eesh. Okay, we're going to come back to these. I wanted to show you something else here. Actually, I'll start with a new chart. We'll do a new instrument here. Because there's something in Market Analyst, this is another piece of software I use that you can use in TradingView in the same way, and I think it's a really hidden secret of TradingView. But I'm going to open up a new bar chart of the pound or euro pound. All right, and I'm going to change these bar charts to swing relations. Okay, make them a little thicker. Now, swing relation bar charts mean that they change color according to how price closes. So, you know, red means that we've had lower lows, lower highs. Green means that we have, okay, red means we've had lower prices, green means we've had higher prices. Black bars mean that we have had an inside bar. And if you know about inside bars, they're usually a trigger for a change in trend. And then we have blue bars, which are outside bars. Okay? Outside bars. An inside bar means that it has traded within the entire high and low of the previous candlestick. And then a outside bar means that it has traded above the high and low of the previous candlestick. So inside bars trade within the entire price range of the previous candlestick. Outside bars have traded outside of the entire price range of the prior candlestick. Okay? Anyways, so we see these, and then Gann swing charts. This was like Gann's, how he found trends. This is, I don't remember him calling them these, but if we just see the red and the green here, why don't I reduce the... So Gann swing charts. Now, how these operate is that I have it set for the bars to show that I need 2 candlesticks in the opposite direction to confirm a change in trend. So if we look here, this is the euro pound. We have a clear down move, and then the trend doesn't change to an uptrend until that second candlestick. Okay? And so you can see how this works. And you can see that it's much more effective on longer time frames. Okay, so we have 2 inside bars that would have signaled the... Actually, if we... What am I on the... 480 minute, right? Yeah. Okay, so if we're watching this and these candlesticks form, we have 2 that formed and then that changed the trend red. And white doesn't want to go any further. Okay, here we go. And you can see how these form, okay? What I want you to pay attention to is the color of these drives down, okay? Not so much the bars here don't really matter. All that really matters is the color of the swing. All right. Now, how does that apply to TradingView's charts? Well, there is a chart setting in TradingView called Kagi. Now, Kagi charts are Gann swing charts. And how we get these, and there's not a lot on TradingView regarding Kagi charts. And so how these swing reversals happen, again, oh, actually, let me bring up the euro pound. Euro pound and let's go 2. Okay, so on the euro pound, really what we've got going on here is not a lot different from what we've got right here. Okay? Let me it's a tiny bit different in how it looks, but for the most part it's the same. Okay, now how do you trade these? Well, it's actually very simple. When you look at the shoulder and the waist here, you'll see that, okay, we were in a downtrend, okay, and then as price crossed this previous shoulder, that's when it turned green. And then that was our entry, okay? When we see a level like this, when there's 2 or more and it breaks, that's usually a good sign to enter the short. So that was a good short entry right here. We can look at this on the, and the thing is what I'm fairly certain this means is reversal amount. I believe that this means that, so 2 pips on the euro pound, I think this is referring to 2 bars and not 2 pips. I think it means waiting for 2 bars of a candlestick direction to confirm a change in the trend. All right, and so if we could compare this to why don't we look at this on the Aussie dollar. Okay, now the Aussie dollar is looking weak here, okay, because we have prices crossed below this shoulder here. It has crossed below these shoulders here, and so the trade would be to go short. You know what, actually I need to reduce this to the like 5-minute. That doesn't really, maybe I have to do it on the hourly. I've been trying to get some confirmation from TradingView's team on the Kagi charts because either these are different than Gann swing charts or they are not calculating the swings correctly. I'll have to check. What boggles my mind with TradingView is that they take forever to add some of the like probably the most requested things. You know, like, I don't know. There's a lot of things that they take forever to add and implement, but then it's odd. There's not a whole bunch of people clamoring for Gann swing charts or Kagi charts. There just isn't. Most people don't even know what this is. But if I'm looking at the Aussie dollar right now and I'm looking at how this is set up and how to trade it, then right now I am looking at a short opportunity. If we look at and you're going to have to change this number up here. You don't want to go ATR. ATR is by default. You don't want to go ATR. You want to go reversal amount, and you want to go by like 2 or 3. But anything that has a yen pair, anything that's a yen pair it's going to be different. You're going to have to, 1 pip is like, or this is 2 pips on a yen chart, okay? And you can use Ichimoku with this system. It is very, very doable and usable. I just wouldn't use, I would not use the conversion or baseline because these moves are not trend dependent on averages based on time. This is independent of time. Okay, but we can see that if we go to market replay and let's set it back here. Why isn't it? Oh, it's not available for this chart type. Well, boo. Well, that is dumb. But we can see that, actually, I meant to get rid of the lagging span too. What we want to see is a trend change happen slightly before or slightly after we breach a cloud in one direction. So if we observe that happening here, that's nice and easy to spot. There's some exceptions to how you trade Ichimoku in Kagi charts because it's not like a time dependent thing, so you can take moves a little early. You know, if you enter a supportive cloud and you have a change in trend back to bullish, generally you can go back to being bullish. Same is with going short. All right, and the oscillators do work effectively in this kind of a chart. So keep that in mind. And let's look now at pound dollar chart. So the pound dollar, we're showing we had a bullish crossover here, but we're still below the cloud, so we're not looking to go long yet. Okay. And we can still use things like our Fibonacci's. And then this is almost like Renko in that it kind of clears up the charts a little bit. You know, it gets rid of a lot of the noise associated with you know, using just candlesticks. So there's a lot of benefits to Kage charts, and they're, you know, they are probably relatively new to you guys, but I think that these are a phenomenal and a fantastic way to trade if you are finding and struggling with candlesticks and struggling to identify trends. Kage charts are, Gann swing charts are very, very effective, and it helps you, you know, identify entries and exits. And the thing is, so in TradingView, like when it's colored teal like this, that means that it's telling us that the current price action is indicating that prices are moving up, and this may paint green. Now we can be proactive about this because we know where the current support and resistance zones are, and that's on these shoulders here. So, you know, if prices were coming down and and you know, we were getting a little bit shallower, and we know that this right here is going to be kind of a natural price resistance area. So if we were looking to go bullish because the oscillators are extended, we would put a buy entry above here. Okay. Again, these were Gann's master trend detector. It was very popular back in his original courses. It's just not well known these days, but I think it's one of the great hidden gems of TradingView. Now, let's look at some other. Let's check out the euro. Now the euro is really showing that consolidation that we were talking about, that kind of wedge coming into here. And so there's a really nice area to look for going short based off of Kage charts, and that's looking at a break below this zone. Okay? Certainly not right now because we are coming off of these supportive these supportive buying zones, but that is a zone that we can be looking at. Let's take a peek at the Aussie dollar. Okay, Aussie dollar is actually showing a little bit of extended weakness here at these levels. Okay, so there is a short signal on the Aussie dollar because we broke below this shoulder neckline here. Even though we are kind of neutral in neutral conditions on both the RSI and the composite index, this is still indicating a short entry zone. So we can wait till the conditions are met for this to be closed. So we're looking for two hourly candlesticks to the south to confirm the change here. Otherwise, you know, if we break this one as well, we could consider going short it, really probably 77. We look, maybe we want to get down lower. I mean, there's an upward trend line here that we could actually draw. And the conditions are not in overbought or oversold territory, but we do have more of a selling condition on the composite index than we do a buying condition. So actually, selling here might not be a bad idea. I'll wait to see this one play out. The New Zealand dollar. Now that is showing that we are printing a lower low here. And we're below the cloud. So that would be a short. I'm actually interested to see what the lagging span looks like here. That's probably a good short opportunity. Let's do that. 73.05. I'm going to type in Kage chart with lagging span on. That's the reference tomorrow. Okay. Now let's take a look at the euro pound that we have going on. That is showing us still having some short bias here. But we are kind of, we might have kind of missed that move a little bit. Let's see if we have any others. I'm looking at euro dollar. Not doing much of a thing at all. Just have a lot of funky, indecisive moves this morning in a lot of our markets. Let's look at US dollar, Canadian dollar. Okay, so this is actually a pretty good one to look at because we could I'm just looking if I think could probably, okay, so, okay, now we're looking to see what's going on here. Looking like it wants to form a base here, because that could mean we move up from here. So the buy entry actually is fairly, that's right within this. We were saying 107.37. That was in the same area we were looking at. So, yeah, it's perfectly fine. Kind of watching and waiting. We could compare this to Renko if we wanted to. Again, Renko is going to be, this is easier to apply than Kage charts because Renko is just a set amount of pips per brick. So we could go 10 pips per brick. Okay. And so if we want to get in short from this area, then we want to go short at a break below this brick. We could put in a couple trade ideas using these. We could say 23.70. There's an idea. Really, because we're trading along this triangle here. We're near the upper part. Not interested in taking a long here. More interested in looking at a short and then going long again back down here. Oftentimes, though, because of when we start to look at these charts and trading, we're actually always looking at some reverse move situations. Taking a look now at the pound dollar. And what are we looking at here? We're looking at 10 pip moves. So it's moved 10 pips here. It hasn't quite moved 10. Oh yeah, and you know what? Actually on the Renko charts, you want to go to a 1 minute chart. As close to a tick chart. So TradingView's bricks, you know, if price moves 10 pips or 12 pips or whatever, it's not going to paint the brick yet until the time has ended. So there is no tick data in TradingView. So the closest thing we have is a 1 minute bar. Okay, so you know it's not like other software where you can where it'll just automatically, you know, apply those bricks for you. Oh, it doesn't want to put it on there. I thought it would. It doesn't even measure the composite index? Well, that is very bizarre. Well, anyway, so we have these Renko bricks. And they'll, like on other software that'll take tick data, it'll just form, you know, when a brick has moved a certain amount of pips. It doesn't wait for a time to show up. So the minute chart is the best that we've got. And so if we're looking to short this zone, because this is where price had stopped before previously, you know, we are, depending on the swing we're looking at, we're up against that 382. Maybe it wants to go up to the 0.5, which is at 42.7. Or if we're looking at even this current swing, we are kind of up near that same zone. Got this fuzz flying in front of my face here. So that is what we are kind of taking a look at. Saw some one second here. Why is that not? What is this doing? My phone is being weird. Oh yeah, I should have talked about the jobless claims. Let's see, jobless claims. Worse than expected, 232 versus 233. Meh. Well, wait a minute. It's actually better than previous. The consensus was 230. The actual was 232. So, you know, whatever. Philly Fed manufacturing survey was great. 23.2. 0.1 less than last. But, yeah, still good. So now, okay, we've got the pound is sitting here now. And so this is kind of the power of the Renko bricks, is that, so it takes 10 pips of movement up to form this Renko brick, because we went from 42.30 and then it closed at 42.40. So if price comes down, you know, it moves down 10 pips from where it's at, but then to make another brick, it has to move another 10 pips. So from its current value area, it needs to move 20 pips down before we form another red Renko brick, okay? So that's kind of the power of Renko, and how much, when a change in a brick forms, that is generally a pretty big deal. Especially, I like that on TradingView at least you can use these oscillators, because I find that they do provide a lot of a good trading opportunities, especially when both are in extended condition. Like composite index extended right now, but the RSI is not. But we're in a selling setup here. So if we wanted to, based on Renko alone, we could short at a return to 142.30. Okay. So that's one way to look at that. Because we want to get in the short early, because certainly if we know if price is trading up here and it comes down, that means it's traveled the entire length of this current Renko brick. And then if it falls back down to here, more than likely it'll travel lower, and it'll test the it'll form a new brick. And we've got our oscillator to kind of help us out with that level, and so we've got a good signal for the short there. Let's look at this with other, and we're below the cloud. US dollar, Canadian dollar. So same thing here. Where's price sitting at right now? It's sitting at, why do you want to draw a line? Let's see, scales. Well, that's all right. Well, we know that the price value here is 125.90. That's the bottom of this brick, and then price is currently trading at over here at 125.95. Okay, and so we could enter a buy, because if we look at our composite index, we're in a buying condition. If we want to look at a buy, we could buy at 120. Okay, 126. That's easy. $126 using Renko bricks. Okay. Let's take a peek at yen paired. Let's look at the dollar yen. Again, dollar yen, you're going to have to change this from, if you want 10 pips, it's got to be 0.01 instead of 0.0001. So looking at the dollar yen, it's actually looking a little heavy, probably, maybe. We'll have to see. It's really not a clear move one way or the other. A lot of these guys are just kind of hovering around here. If we want to look at, if I can find where I put it, right here. Want to look at these from our more traditional view, that using like the Gann style that I like. Aussie dollar is falling down below this angle, finding supportive angle here, supportive buying conditions on the RSI and the composite index and the US Canadian dollar, kind of returning back to this value of support. Dollar yen, we've crossed beyond this angle, and we found support on this arc. We should find a lot of support down here if price returns. Pound dollar, we are in an obvious short zone here, especially if we consider this angle has been acting as a as a rejection angle, and we're back into this arc, which should act as resistance. We are very extended in the composite index. We have similar structure in both the composite index and the RSI, so that supports our selling bias. Dollar, let's see, euro dollar. really just shorting mainly because we are closer to the upper edge of that triangle than we are to the lower. Let's see, Aussie dollar, New Zealand dollar. New Zealand dollar might catch a bid here. Well, we'll see. Euro pound. Euro is probably looking for a buy entry here. We'll have to watch it play out though. A lot of markets just kind of deciding which way they're going to go. Yep. So yeah, those are trades. We got some trades with various ways to look at them, and yeah. Anyways, I hope you guys have a good trade day yesterday. Hopefully, we're gonna have a good trade day today. Hopefully, we get out of this. I mean, Tuesday into Wednesday was great because things broke out of there. We had some contrary moves. We had a lot of markets that have been trending for a while who are starting their new down thrust move. So it's pretty normal maybe for yesterday and today maybe to show some consolidation or retesting of those value areas. And then later on today and into the overnight, we see kind of those same moves. So like in the pound dollar, sometime maybe later this afternoon or even this morning, and then certainly by tomorrow night, we should find prices continuing to move down. All right. And so these pullbacks are nice because we get to re-enter. And even if they retrace higher, we still have more short entry opportunities. The big blow up in prices can be when we fall below this angle here. Okay, because we can. This is hard to because this support angle right now is right here because we fell below. Remember, the rule of angles is that when you break an angle, you're going to move to test the next one, and so the next angle is down here, and we haven't tested it yet. Okay, we've kind of traded back up, but we more than likely are going to have to move down to test this angle as a support angle, which means we have to move through this support structure, this trendline support structure. This is a very hard area to break, and so it might not be until we get. This will be probably our first strong support zone. This is the mid between their two harmonics. This is the last arc here. And then this angle may be treated as a strong support zone too. So, we have a lot of downside opportunity. If we're looking at this, how far is that down? From where we're presently at down to here, we're looking at a 86 pip move between today and tomorrow, just from this present value area, and that should be a pretty nice move once we kind of move down here. So, anyways, yeah, you guys have a great rest of your trade day. I look forward to watching and seeing what happens later on throughout the day. And it's gonna be fun to come back and visit these other trade ideas we had using the Kagi chart and Renko. And yeah, hope you guys found this interesting and helpful, and I will speak with you later. Bye-bye.